Stick with me as we break down what's driving this arbitrage explosion, how it's impacting the market, and what you can do to protect yourself. And before we dive in, make sure to hit that subscribe button, like this video, and share it with your friends. Also, drop your thoughts in the comments below. I want to hear your take on this silver showdown. It's January 2026, and something huge is happening in the silver market right now. China is paying an eye-popping $126 per ounce for physical silver, far above the price here in the US, which is stuck around $90. This massive price gap isn't a T, just a number on a screen. It's causing US silver vaults to drain at an alarming pace. Physical silver is literally flowing out of American warehouses and heading straight to China. Why does this matter? Because when one country is willing to pay that much more, it creates a powerful arbitrage opportunity that's shaking the global silver market to its core. The US is losing its silver stockpiles fast, and this isn't just a short-term blip. It is a sign of a much bigger battle brewing over control of this critical metal. The clock is ticking, and the pressure is mounting. If you're invested in silver or thinking about it, you need to understand what is driving this price explosion and what it means for the future of the market. Stay tuned, because the next few minutes could change how you see silver forever. Let's break down arbitrage in the simplest way possible. Imagine you're at two different stores in your town. At store A, a popular gadget costs $90, but at store B, the exact same gadget is selling for $126. What would you do? You would probably buy the gadget at store A for $90 and then sell it at store B for $126, making a quick profit, right? That S arbitrage in action, buying something cheap in one place and selling it for more somewhere else. Now, apply this idea to silver. China is paying $126 per ounce for physical silver, while in the US, silver is priced around $90 per ounce. Traders and investors see this huge price gap and want to take advantage. They buy silver in the US, where it's cheaper, and ship it to China to sell at the higher price. This movement of silver from the US to China is called arbitrage. Why does this price difference matter so much? Because silver isn't just a commodity, it's a physical metal that can be moved, stored, and sold. When the price gap is this big, it creates a strong incentive for silver to flow out of US vaults and into China. This drains the US supply, making silver scarcer here and pushing prices up. Arbitrage helps balance prices between markets, but when the gap is huge and physical supply is limited, it can cause serious disruptions. The US losing silver to China means less metal available for American investors and industries, which can lead to higher prices and market stress. In short, arbitrage is like a financial tug of war, and right now, China is pulling hard on the silver rope. Right now, the price of physical silver in China is trading at an astonishing $126 per ounce. While in the US, silver is hovering around $90 per ounce. That is a massive 36 difference, a gap that is rarely seen in any commodity market, especially one as globally traded as silver. So why does this price gap exist? First, it comes down to supply and demand imbalances. China is experiencing a surge in demand for physical silver from both retail investors and industrial users. Millions of Chinese savers are rushing to buy silver as a safe haven against currency devaluation and inflation. At the same time, China's booming solar panel and electronics industries are gobbling up silver for manufacturing. This intense demand is pushing prices higher locally. Meanwhile, in the US, the silver market is dominated by paper, silver futures contracts, and ETFs that represent claims on silver but don't always correspond to physical metal. The paper market is heavily influenced by large banks and traders who often short silver, keeping prices artificially suppressed. This creates a disconnect between the paper price and the real physical price. Another key factor is arbitrage barriers. While in theory, traders should buy silver cheaply in the US and sell it at a premium in China, physical silver is heavy, costly to ship, and subject to regulatory controls and tariffs. Capital controls and import restrictions in China also limit the free flow of silver, allowing the price gap to persist. Finally, market manipulation plays a role. Large financial institutions have been accused of suppressing silver prices in Western markets to benefit their trading positions, while the physical market in China reflects true scarcity and demand. This price gap is more than just a number. It is a warning sign that the silver market is under extreme stress, with physical silver becoming scarce in the US as it flows eastward, driving prices toward a potential explosive breakout. Did you know there's a massive silver rush happening right now, but it's not what you think? A huge price gap between silver in China and the US has triggered a powerful flow of physical silver moving from American vaults straight to China. Let me break down how this arbitrage works and why it is causing US inventories to drain at an alarming rate. Imagine this. Silver trades for around $90 an ounce in the United States, but in China it commands a whopping $126 per ounce. For traders and investors, that's a clear and irresistible profit opportunity. They buy physical silver in the US at the lower price, arrange to ship it to China, and then sell it for that much higher price. This isn't just a theoretical concept, it's happening on a massive scale. Silver bars and coins are physically leaving US warehouses and vaults every single day. But moving all this silver is not as simple as just buying it and putting it on a boat. The process involves something called delivery demands on futures exchanges like COMEX. When traders hold futures contracts, they have the option to stand for delivery. This means they can demand the actual physical silver instead of just settling their contract for cash. As these arbitrageurs buy up silver in the US, they often convert their paper contracts into physical delivery requests, pulling real silver directly out of the registered inventories. These delivery demands put enormous pressure on US vaults, which hold the registered silver that can be delivered against those futures contracts. As more and more contracts stand for delivery, the inventories shrink incredibly fast. In fact, recent reports show registered silver inventories have fallen to historic lows. This is a clear signal that the physical supply is being drained much faster than it can be replenished. This inventory drain creates a dangerous cycle. As silver leaves US vaults, the available supply for other investors and industrial users gets smaller, which should push prices higher. Higher prices would then attract even more arbitrage activity, speeding up the outflow of silver. However, the US paper market has struggled to reflect this physical scarcity, keeping prices artificially low and making that arbitrage gap even wider. In short, the mechanics of arbitrage are physically moving silver from US vaults to China, draining inventories, and setting the stage for a potential supply crisis and some explosive price moves. This massive outflow of physical silver from US vaults to China is sending shockwaves through the American silver market. It's creating a perfect storm of shrinking inventories, mounting price pressure, and growing signs of panic among market participants. First and foremost, those registered silver inventories, the physical ounces available for delivery, are rapidly declining to dangerously tight levels. When inventories shrink this much, it means there's less silver available to meet delivery demands, industrial needs, and investor purchases. This scarcity is putting intense upward pressure on silver prices in the US. While the paper market price has remained relatively subdued, perhaps due to manipulation and short selling, the physical market is feeling the strain. Dealers and wholesalers are reporting rising premiums on physical silver products like coins and bars, reflecting just how difficult it is to source the actual metal. This growing disconnect between the paper price and the physical price is a classic sign of extreme market stress. Moreover, the rapid inventory depletion and price divergence are triggering panic signals. Investors and traders are getting nervous as delivery demands spike and vaults continue to empty. The usual liquidity and smooth functioning of the silver futures market are being disrupted, leading to increased volatility and erratic price swings. Some market insiders are even warning that these stress signals could foreshadow a major short squeeze or a delivery crisis, where those who bet against silver scramble to cover their positions in a market with not enough physical metal to go around. This scenario could cause prices to skyrocket and even force regulators to step in. The US silver market is clearly under significant strain. Shrinking inventories, rising price pressure, and growing panic are all clear indicators that the market is approaching a critical tipping point. This could lead to dramatic price moves and lasting changes in how silver is traded and valued for years to come. Have you heard what's happening with silver? It's not just about prices going up and down anymore. We're witnessing what some are calling a world war for silver, a massive geopolitical and economic battle with the US and China at its center. And you need to know what's going on, because it could have huge implications for your wealth. So, what's the big deal? Well, China is paying an insane premium for physical silver, as high as $126 per ounce. That's creating a massive price gap with the US market. This isn't just a random market fluctuation, it's a strategic move. Silver is absolutely critical for China's ambitions. It's essential for manufacturing solar panels, electronics, electric vehicles, and even military equipment. To dominate these high-tech sectors, China needs a secure, stable supply of silver, and they're willing to pay whatever it takes to get it, outbidding everyone else on the global stage. Meanwhile, on the other side of this conflict, the US is watching its silver vaults drain at an alarming rate. The rapid outflow of physical silver from US stockpiles is a serious threat to domestic supply chains. This isn't just about a commodity. It's a strategic asset tied directly to national security and economic independence. This battle is fueled by the broader tensions between the US and China, trade disputes, tech competition, and a struggle for global influence. The silver market has essentially become a proxy battlefield. China's aggressive buying shows a long-term strategy to lock down resources, while the US market is struggling to maintain control as its inventories shrink. This isn't just about prices. It's about global power, technological leadership, and the race to control the materials that will shape our future. With silver prices soaring in China and US vaults draining fast, it's clear the market is entering a critical phase. So, what can you do to protect your wealth and position yourself for what's coming? First, focus on physical silver. In times of market stress, paper silver like ETFs or futures contracts can be incredibly risky, especially with delivery failures and price disconnects becoming more common. Owning physical silver bars or coins means you have a real, tangible asset that can't just disappear due to market manipulation or defaults. Second, buy sooner rather than later. This huge price gap between China and the US is a massive warning sign. It suggests silver prices are likely to rise sharply. If you wait for a better price, you could miss out entirely or end up paying much higher premiums when physical silver becomes even harder to find. Third, always use reputable dealers and think about secure storage. Make sure you're buying from trusted sources. Whether you choose to store it at home in a secure safe or use a professional vault service, protecting your investment is key to having peace of mind. Fourth, stay informed. The silver situation is changing by the day. Follow reliable news sources and market updates so you can react quickly and avoid making decisions based on panic. And finally, remember to diversify. While silver is a powerful hedge against uncertainty, it's always wise to balance your investments across different assets to reduce your overall risk. To sum it all up, China is paying a huge premium for physical silver, draining US vaults and signaling a major supply crunch. The battle over silver is a geopolitical struggle with massive implications for investors everywhere. The US market is under serious pressure, inventories are shrinking, and all the warning signs are flashing. If you're holding paper silver or just waiting on the sidelines, you could be caught completely off guard when prices surge. The time to act is now. I want to hear from you. What are your thoughts on this silver showdown? Are you buying physical silver or are you staying cautious? Let me know in the comments below. If you found this video helpful, please give it a like and share it with your friends and fellow investors. And don't forget to subscribe for more updates on this unfolding story. Your engagement helps us bring you the latest insights. Thanks for watching, and I'll see you in the next one.